Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Thursday, September the 6th. We had another inside day from yesterday. Basically a non-eventful day. Markets just kind of chopping around, looking for direction. We did get a little bit of a spill-off coming out of the end of August into the first week of September. That's to be expected. We all know that. However, energy is building, and we are going to get a big move one way or the other. Unfortunately, we don't know which way. There is some big market divergence. There's some things moved today that was in a bull camp. Some sectors that move lower in the bear camp. So we have a bunch of mixed signals. And what we want to do is we don't want to really anticipate the move. We want to let the move happen and then react to that point. So in front, 10-minute chart, and as you can see here, I brought this up before. In the last 30 days, we have been in basically a 20-point S&P range. So not a lot to do in August, and obviously spilling over to the first week of September. I will tell you this much, that will change. We could see here, and I could show you this. I'm going to get a little closer. We have a Bollinger Band, and every time the Bollinger Bands pinch, there creates a little bit of movement, and I'm going to show that to you on the daily chart and also on the 30-minute chart. But we do have a couple of event risks tomorrow, and I want to make sure that you guys are aware of that. It is on the morning call, but I just wanted you to be aware of it. Tomorrow is going to be the ADP report. We have initial jobless claims coming out at 8:30, and we have the ISM non-manufacturing composite. That's going to be at 3, and that's going to be 2 o'clock. That's going to be a market mover. What's going to be really all eyes are is going to be out on the ECB. They're going to come out with some sort of news about their bond buying purchase, and all eyes are going to be on the ECB tomorrow. So another monkey wrench, and this market is literally being pulled in either direction on what the ECB and Merkel's saying, which I think is totally a joke and unprofessional, but that's just me. I like to see the markets be exactly what they are, mechanical, up and down, and supply and demand, right? Without having some guy or woman speaking and pulling the market one way or the other, right? That's how we want supply and demand, and that's how unfortunately we're not getting that since we had the financial crisis back in 2008. But enough said. I want to get into the charts, and I want to show you what happened today. So we really could go either way. I would suspect that I would think we get an initial pop to the upside. I do think the upside is not over yet. I do feel that there is some downside momentum brewing, but I also feel before that, since we are in an uptrend, I do think that this market can go a little higher before it goes lower. But again, timing is everything, so we want to keep our palates dry, and we want to be ready to react without having loaded up a bunch of positions going against you. That's not what we want, right? We want to trade what we see, and we want to manage our risk properly. Okay, so enough said. Enough with the bantering. I want to get to copper. Now, copper really is a Dr. Copper, industrial metal. We all know that, and copper is really a leader. It likes to lead. It doesn't have to, but it really needs to at least follow accordingly step by step, and it hasn't done so in a while. Now, we did break out of this symmetrical triangle, and I did mention that we were making lower highs here, but we are making higher highs and higher lows down here on the bottom of the trend line. Well, today we broke out, so it's encouraging for the bulls. However, we do have the 200 MA here sitting at 358. We would need to really break above it, consolidate for a couple of days, and then really start to move higher. I think it's totally possible. I do not rule out any kind of big rally at all, because there is markets where we're two-sided here. We have also, as you know, guys, we have the ECB with the Federal Reserve, and now that China's talking about having a rate cut. So we have all of the central banks talking up their markets, right? So that's fueling buying demand in the stock market. So we can't fight the Fed. We don't want to fight the Fed, right? They're too big. So we just want to follow the trend and try to get the meat of the move. So there's a lot of stocks that I've looked at today, probably hundreds of them, that are just sitting there waiting for some sort of a move breaking out of a certain range. That's why I feel, and by looking at these stocks every night, you can see there are more long setups than they are short setup. So that's another indicator that's telling me, hey, be on your toes to be really looking for the upside. Okay, now, but the copper, getting back to copper, I do like the way this thing happened, broke out on a bullish engulfing. And look at the volume. Volume has stepped up here. So this is interesting development today. So we don't want to rule out that we have a possible upside momentum. That doesn't mean that you don't want to, if you're loaded up on the long side, you want to put some sort of a hedge on, like I've been saying, it's worth it. The volatility's low, puts are cheap. You know what? Spend some money on insurance. That is if you want to ride out any type of market downturn. Okay, and if not, then stay steady and keep your longs. As far as the swing traders are concerned, obviously, I wouldn't be loaded up on the long side and or the short side at this time. I'd be looking to stay on the sidelines as far as swinging anything right now until the market takes some sort of a forward direction, whether it be either up to the upside or to the downside. Okay, but anyway, so I like the development in copper. Now, let's examine the Russell. Now, this is the Russell 2000. This is the Russell itself, is not an ETF, and I wanted to show this to you that we did have this big engulfing candle yesterday. And we did look at our stochastics. They're not really oversold as of yet. And Russell is basically starting to play catch-up to the S&P. Now, Russell is also a leader. All right, we don't like to see the Russell lag the S&P. We want to see it lead the S&P. However, it is starting to play catch-up. We are making higher highs and higher lows. And we had an inside day, this red candle from today, which is fine. We had energy building, and now we're just pausing. So, and we're at this little area here, this topping formation that we have. Now, it's either going to be one or two things. It's going to break to the upside and then consolidate for another move and probably look to take out this area here, this high, or start to roll right back down again. But you can see we do have some support, the 20, 50, and the 200-day moving average. So, again, interesting development. It held at the upper end of this candle. So this is important. If you're reading candlesticks, you want to see that we have this little indecision candle sitting right on the resistance area. This is still a good development here. So we have the Russell moving higher yesterday, consolidating today, and we have copper. Now let's take a look at the Russell and the S&P. Now this is a ratio chart here. So as you can see here, higher high, higher high, higher high. And now we have the S&P just kind of like rolling over a little bit, but sitting right on this 1400 area. 1400 is going to be a real big key. As you can see, it tried to break it, and roll back up again. So, again, developments are looking better for an upside break. But anything can happen, and news can trump the charts. Please keep that in mind. Okay, now, let's talk about the transports. Terrible, terrible, terrible day today. This is what concerns me. If the transports were moving along, now back to the upside, we have copper moving along to the upside, the Russell start, I would be more enthusiastic to get to start looking for longs and start building positions. Not at this level. I just can't, and I wouldn't tell anybody to do so because it is more risk involved, right? We're looking to take calculated risks in the market. We're not looking to gamble. If that's the case, we would go to Atlantic City or Vegas. We're not here to do that. We're looking to say, okay, is there a risk reward? What is my risk? What's my reward? And and seeing this market diverge, which is pretty big market diverge, the transports, that's concerning. We had FedEx, as you know, reported, warned after the bell. UPS followed suit, and they're very close to a gauge of GDP. So I'm really concerned about this. Again, China. We talked about this numerous times this whole month, and China is going to be the canary in the coal mine. I'm telling you that. They can mask it as much as they want, but China is really is going to be set for a hard landing, and nobody's going to like it because commodities are going to go lower, and eventually markets are going to go lower, and the dollar's going to rally. Okay, that being said, let's talk about the dollar real quick. The dollar, long-term trend line here, bullish falling wedge. 200 MA, a lot of support in this area, a lot of support, okay? So, that being said, I like to see if we're going to bounce, usually in a bullish falling wedge, we do take an initial break to the upside, and then we come in and back test it in a flagging formation, and then we start to break back up again. So, bullish setup, that doesn't mean it has to. This could just literally roll over and break down. And our next target would be at 78, which would be very bullish for the market. But I am seeing a bullish pattern in the U.S. dollar. I am seeing a negative breakdown in the transportation sector. Not good. Okay, copper is starting to play a little catch-up, but still has a lot of ways to go to play catch-up with all the other indices as far as the S&P and the Dow. Okay, and they are not leaders, they're followers, but they're leading right now. Can they pull them up? I'm sure they can, but with a little help from the ECB and the Fed, Thursday and Friday is going to be big because tomorrow we have ISM numbers, which is going to gauge manufacturing again, and then we're going to talk about Friday, which is going to be the non-farm payrolls. And like I said, yesterday's morning call, we got to use caution because again, this is the last number before the election, and Obama and Ben Bernanke is going to want to keep their job. So anything can happen. They could easily fuel a rally for the next 30 to 50 S&P points. Okay. All right. Enough that. Let's get back into the charts. And I mentioned that energy is building. Well, Mark, how do I know energy is building? A lot of you guys know I do follow Bollinger Bands, and I like to see where we are as far as an overbought state or oversold, and momentum indicators here, MACD, RSI, stochastics, classic momentum indicator. Could kind of read overbought, oversold. And here we are. We're unwinding our overbought reading in the stochastics, right? Because we're just basically consolidating. That's what it can do, and that's fine. And it's the same thing with the MACDs. Now, if you looked at the orange area here and down here in the bottom, and I'll bring it closer into a 30-minute chart. I like looking at a 30-minute. For some reason, it works better. You could see in this area here and here how the Bollinger Bands start to tighten. And when they do, you usually get some sort of a move. Now, unfortunately, it doesn't tell you where, on which side. Does it go up, does it break higher or break lower? That it doesn't tell you, but it does tell you that energy is building and momentum is ready to start to break. Now, let's dial this thing down a little bit more. I know this video is going to be a little longer, but I want to show you. Here's the daily of the S&P, the spiders. S&P spiders right here. Now, let's take a look at the 30-minute chart. Now, if you could see here, here, and here, this area here, this is where energy is starting to build. And if you looked here, pinch, broke lower. Pinch, broke higher. Here, really tight. We broke up, and then we rolled down again. So energy is building, guys. So be on the lookout for a big move to come in the next few days. If not this week, definitely for next week. IWMs, look at the Bollinger Band, the orange bands here. Energy is building, getting really, really tight here. Okay? Now, again, double top formation. Actually, we have a top here, 1, 2, 3, 4. So this area is big for the IWMs, right? Same as the Russell, 82. Let's call it 82. A break above here is going to send these indexes higher, and that's what the Russell gauging risk. This is something that we want to look for. Okay, transports. Again, you saw this on the IYT. Horrible. Just a really, really bad, ugly-looking chart. Okay, now let's take a look at the SMHs. SMHs, fine, flagging lower, holding a 200-day. It's going to really need to hold here. The SOX doesn't have to lead, but it really can't be lagging as well. It's another sector that needs to really move along with the rest of the indexes. Double top, as we said last week on the Qs, still holding true here right now. But we touched that 67.45 I mentioned 2 weeks back, and look at this volume tapering off. And that's fine. If we're just sitting here consolidating, that's fine. That's what you want to look for. Again, bullish formation. Last chart, guys, and then I'll let you guys go. Again, Qs, big cap tech, sitting right here, just hovering on the upper end of the band. Again, bullish. Lot of signs for a bullish case, but with the transports lagging, copper really hasn't broke out. We're starting to see copper break out. We need to see more evidence before we get really excited that we have some more upside momentum. Keep an eye on those ADP reports, ISM non-manufacturing, and of course initial jobless claims. Then on Friday, I'll mention again on the next report, non-farm payrolls. But it's going to be a real interesting next two sessions, okay? Be on your toes, everybody. Have a great day, and we'll talk to you tomorrow. Take care.